Is the AI boom cooling off? If it were, there's one company that would show it first. NVIDIA just reported earnings, and the results were anything but weak. Demand for AI infrastructure is still surging. Data center growth accelerated again, and management is talking about the next wave, not a slowdown. So if you want to know whether AI is fading, this report gives you the answer. On screen, you're seeing the fourth quarter breakdown. Revenue came in at $68.1 billion. Wall Street was expecting $65.8 billion. That's a clear top-line beat. Adjusted earnings per share came in at $1.62, ahead of the $1.53 estimate. Another beat on the bottom line. And the forward outlook? For next quarter, NVIDIA is guiding revenue between $76.4 and $79.5 billion. Analysts were expecting around $72.7 billion. That's not just solid guidance, that's acceleration. Data center revenue, the core AI engine, came in at $62.3 billion, ahead of expectations again. The only soft spot was gaming revenue, slightly below estimates. But zooming out, revenue beat, earnings beat, data center beat, strong forward guidance. This is not a slowdown headline. This is expansion. But the numbers were only part of the story. The earnings call is where NVIDIA made something very clear. Jensen Huang framed the entire AI cycle around one idea: compute equals revenues. In the AI economy, infrastructure spending isn't optional. It directly drives revenue growth. If companies want more tokens, if they want smarter models, if they want agentic AI systems running in real time, they need more compute. And that's why demand isn't slowing, it's expanding. Management said we've reached the agentic AI inflection point. This isn't just chatbots anymore. These are systems that reason, write code, execute multi-step tasks, and act autonomously. And adoption is accelerating fast. Jensen pointed to OpenAI, Anthropic, Meta, and others scaling aggressively. NVIDIA announced a $10 billion investment in Anthropic. Meta is deploying millions of GPUs. Partnerships across hyperscalers continue to deepen. That's not what a peak looks like. That's ecosystem expansion. Now let's talk guidance, because this might be the most important piece. For the upcoming quarter, NVIDIA expects revenue of about $78 billion, plus or minus 2%. And here's the key detail. That outlook assumes zero data center compute revenue from China. Despite that, they're still guiding strong sequential growth. Gross margins are expected to remain around 75%. Operating expenses will rise as they invest aggressively in next-generation architectures. Management also said they now have visibility extending into calendar 2027. That's unusual. Purchase commitments have increased, inventory is up, and supply for advanced chips remains tight. Customers are locking in capacity well in advance. Another major takeaway? Sovereign AI revenue. Countries building their own national AI infrastructure more than tripled and exceeded $30 billion for the year. This is no longer just hyperscalers. It's governments, enterprises, AI-native startups, robotics companies. And Jensen emphasized the next wave beyond agentic AI, physical AI. Autonomous vehicles, robotics, industrial automation. Physical AI already contributed more than $6 billion in annual revenue. So when you zoom out, we're not seeing contraction. We're seeing broader adoption, more use cases, more customer diversity, more global expansion. The biggest risk management highlighted? Supply constraints, not demand weakness. And that's a very different type of problem. So let's go back to the original question. Is the AI boom cooling off? If it were, we would see slowing data center growth. We would see weaker guidance. We would hear caution from management. Instead, we saw acceleration, strong forward guidance, visibility into next year, massive ecosystem investments, expanding global demand, and one clear message: compute equals revenues. AI infrastructure isn't hype spending. It's tied directly to monetization. Companies are scaling because AI is generating real revenue, and NVIDIA's guidance reflects that. So based on this earnings report, the AI boom isn't over. It's still building, and we may just be entering the next phase, agentic AI and physical AI. We'll see how it plays out, but for now, the data is clear. Thanks for watching. If you found this breakdown helpful, like and subscribe, and I'll see you in the next one.